Hey traders, welcome to Charts and Coffee. This is my medium-sized mug today. I think I've been drinking a little bit too much coffee, believe it or not. And we're going with a medium cup. And also less caffeinated as we start our day trading sessions in the Sector Secrets Mastery starting this morning. So a little less caffeine. It's always a smart thing to do when we're going to be venturing into some short-term time frames. I do want to take a look at the economic calendar with you all to kick things off. If you did not attend the Sunday, the weekly report, check that out. We went into a lot of detail about the calendar. It's a pretty simple calendar where it's very much geared towards Bank of England, Bank of Japan, ECB on Thursday, and then rolling into next week, and the FOMC. A lot of central bank emphasis this week and next. Other than that, not a whole heck of a lot. We know that ultimately we're expecting another hike next Wednesday from the FOMC, likely another 3/4 of a point. We also know that we're settling in to a December peak in terms of the target rate probability reaching that target rate, that peak target rate come December. And it's basically moving around between a zone of 3.5 to 3.75%. On the low end, there's a lesser probability of 3.25 to 3.5%. And on the upper end, there's a slightly less probability for 3.75 to 4%. And why we move one way or the other has a lot to do with inflation. If inflation's running hotter, as we saw last week, then the higher end of that target rate probability gets hit. None of this is a surprise. This is where we've been vacillating, kind of going back and forth within those three possible outcomes for most of the year. Anything less than 3.25% and anything more than 4%, that's where we go into the shock columns of target rate probability. So that's where we sit. Of course, we're in earnings season. If you have a particular stock that you are watching that is within 48 hours of earnings, for those of you that are asking questions about stocks that are within 48 hours of earnings, really easy answer. I do not trade into earnings. I don't take it, and I'm not looking to take advantage of this very binary play of, am I going to guess on earnings right, or am I going to guess on earnings wrong? No guessing. We want to take advantage of either the sell-off or the rally into that particular hot zone, and then after. So I'm either going to be playing sort of the pre-ramp up or down, and I'm going to be playing the post, but not through earnings. So if we have a stock that's 48 hours within earnings, rest assured, I'm not going to be trading it. All right, so let's jump into the questions. After all, this is what Charts and Coffee is all about, your questions. So let's go ahead and dive in. First up is Peter asks, when we do not have correct directional bias for an HPMR trade, well, we're not going to know it's correct or not correct till after the fact, but okay, if the bias changes or if the read was not as accurate, sure. Why not go long when the multi-trend turns double green? Doing so last Friday would have been a big winner. Thanks. Peter, do it. Yeah. Not sure what the question is there, but absolutely do it. If you have the structure, which I love that you emphasize, if you have the structure that validates being able to take advantage of a reversion to the wave, that's a reversion to the mean. If you have propulsion dots, if the HPMRs are stair-stepping and you get a setup that's in a double green environment and you want to buy, yeah, do it. We certainly didn't say no. Remember, whenever we have a hot zone that could create a lot of volatility, there is always the chance that it's just not going to be worth the potential risk. That's a completely different conversation than structure. We can have great structure in an environment where we have a lot more risk present because of the underlying psychology. So really, to answer your question the most basic way, yeah, go for it. Absolutely. All right, next up, Greg, help us understand market direction this week. this week, Greg, no one tells the future, my friend. We go session by session. And I think that there's a psychology out there of picking targets and predicting, neither of which I will ever do because it's really uh, not something that anyone can do. Although you watch a few hours of television, golly, those folks are telling the future all the time. It's so funny how we think that there are some people out there that know the future. None of us do. So there you go. However, as far as current market direction, it's still choppy. It's heading up towards a resistance level. The trend that preceded this chop was down. So my directional bias, kind of going back to Peter's question, what is the direction I favor for a trade, would still be short. But we would wait until we get to the Darvis level above. You can see right here, this purple level, this is the Darvis. And an overbought reading on the slow stochastic. That's what I would focus on. Do I look at the SPX? No. Do I look at the SPY? No. What do I do instead? We look at the S&P futures, which is a much better view of the global risk appetite or risk aversion of the S&P. And then once that S&P has reached a level where we have a setup, then I can look at if I want to trade SPY or SPX. But the main market, gang, for the S&P is the ES futures contract. Remember that it is closed for a grand total of 75 minutes a day. Most other symbols that would represent what's happening in the S&P are closed for far longer. So they're not wrong as much as they're incomplete. We want to look at as complete a way of viewing the S&P as possible. So Greg, that's what I'm waiting on. And I got into a lot of detail on that in this week's weekly watch list. So if you're a member of any of our simpler communities, day trading, free trading room, I think gets it. I'm not really sure, but definitely the options and the futures room. I broke down really specifically the market structure that we have right now, how I recognize what that is with free tools that I give to members of our simpler community, and the tools specific to that structure, the best tool that I have found specific to that choppy structure. So feel free to check that out. I think it'll really help a lot. Next up, how far out do I usually sell puts? I don't sell options. Or how much is the minimum you are willing to take in for? I do not sell options. Trading pigs, I appreciate the question. As a general rule, I'm zero interested in collecting premium. If I do not have a directional edge in a market, then there's no sense in focusing on it. If I do have an edge, directional edge clarity, then I'm just going to get directional debit. So my preference is to focus on long calls, long puts. I don't sell premium. It's very rare. And when I look back on my trading activity over the last 4 or 5 years, I would say that what little I would do by spreads, what little I might do via iron condors, what little I did even selling premium, I've reduced to really one strategy. And that one strategy is if I want to build a position in my longer term portfolio, I'll just call that a position trade. If I want to build a position in my longer term portfolio and I'm looking to buy more than 100 shares, I will use the technique that a lot of folks do, which is I'll sell premium until I'm finally forced, which is what I want to do anyway, to buy the underlying ETF or stock or what have you. So I'm collecting premium on the way to my wish list number. That's the only option selling that I do now. And it's really just an entry strategy for my longer term portfolio. Thank you for the question. Tom asks, would I consider a short on the daily of WSM? Below the 200, like that for bearishness. It's overbought, absolutely. Now remember, the overbought slow stochastic, and I love the way you asked the question, Tom. The overbought slow stochastic is accompanying, as you can see, a lot of proximity to that Darvis level. Gang, keep this in mind. And I know there's a lot of types of support and resistance out there, most of which is a projected level. What I teach you and what I give you all, either through the free layouts in the rooms or through countdowntrader.com, is a process of automating support and resistance instantly. These show up instantly using previous support and resistance levels, which is actually pure, really Darvis. We modernized the Darvis. We're using minor highs and minor lows. Think of those as the swings, right? Minor highs and minor lows are the swings that the Darvis uses to find those support and resistance levels. So check that out. This is the absolute best way to do it. And it keeps up with those swings in such a way that you've got the freshest, the most, what I would say based on price action, the best support and resistance levels that you can take advantage of on that time frame. This applies to a 5, a daily, a weekly. It works on all of them. And I love that you brought it up. So yes, I do like that. Now, in this season, Tom, you do have the dividends. One of the things that dividends will often do is we'll get a little bit of a ramp up into it and then a drop off after it. So you might still be subjected to some ramp up in terms of that dividend date. That being said, you've got everything that you would need really to start thinking about that short in the 133.80 to 134 area. So good eye, good stuff. Good morning, Nick. How do I discern how attractively any given option is priced? Is there a particular metric to go by? Nick, I look at the underlying price action and I look at momentum. If I'm waiting to buy the dip, the fact that I'm looking to buy a call in an overall up market, an overall uptrend that's correcting, that's what I'm looking for. As far as metrics go, a lot of people look at Greeks. I do not look at Greeks at all. Not to be a heretic, but I find that a lot of traders forget. So what happens is options traders start falling in love with the Greeks. And what they then tend to do is become disconnected from the momentum and the trend and the structure and the support and the resistance on the underlying price of the chart of that ETF or stock or futures contract that they're going to play an option on. And I find Greeks almost every time start that disconnect process because instead of looking at the chart, start looking at the Greeks. So I don't use metrics by way of Greeks. I'll use trend, I'll use momentum. So no metrics, just the underlying. And I think an easy rule would be, I'm not interested in buying a call in anything unless I would be interested in the underlying stock or ETF. I'm not interested in getting long a put in anything unless I would also be interested in a short sell of the underlying stock or ETF or futures contract. So ask ourselves, would I be willing to get long or get short the underlying? And then in lieu of getting long or short the underlying, can I then instead get long a put or long a call? And that's the measuring stick for me. All right. Would the daily price movement range ever be something you roll out to help with our swing trades? Relax. If I find a methodology. Now, gang, here's and I appreciate the question. Anytime I release an indicator to you all, it has been in testing, usually for years, not months. Not, hey, look at this cool thing I cooked up. Years and years and years. So when I have a process that I really like and can automate, and then have tested it usually for my minimum is 6 months, but I never ever release something that quickly. It's usually going to be for years. At some point, I might. I don't know that it is as big a needle mover as the hourly price movement range, but it's been something that I have thought about probably for the better part of 10 or 12 years, as long as I've been using hourly price movement ranges. I just haven't come upon a process that I really like yet, but I've tried a lot of iterations of it. And if at some point it'll come out of Raghee Labs and it'll end up something that we'll use. So not there yet, Relux. There are benefits more so, I think, to hourly price movement ranges, which is why we've released that particular bundle of symbols using HPMRs. All right, next up, Martha asks, how often, if you were estimating, would you say you find day trading setups? Martha, yeah, I appreciate the question. It depends on the market. Yeah, it depends on the market. I'm not going to throw a number out there because I'm just pulling something out of a hat, right? And then you're asking for a percentage. Yeah, Martha, no way to answer that. Every day is a new day. Some days are more active than others. So how often do I find day trades during that time? Well, what's the structure of the market? What are the hot zones? What is the market waiting on an FOMC? Is the market waiting on a high impact hot zone event. Yeah, no way to really say. And again, I think this need, and I get it. It comes from, look, we all love certainty. I get it. We all want some assurances. Gang, we are trading. In trading, we don't call it catching, we call it fishing, right? Trading is the same way. I would love to be able to give people percentages, but the truth of the matter is we can't. I think it's said best by, there's a CFTC disclaimer. I've been a Forex and futures trader for a very long time, decades at this point. And there's a disclaimer that says past results do not, and future results, right? Past results are no indication of future results. That's true. That's not a disclaimer. That's true. So I think that, and I get different variations of those questions from time to time. I appreciate them, but realize it doesn't matter because it's what happened yesterday, right? And if you're going forward with that, well, we usually win 80% of the time, we get 5. What if we don't? What if we don't? Right? So there's no way to really do that. We take what the market gives us. And I think that's the healthiest way to approach the market. I can completely appreciate the question, though. All right, next up is NFLX. All right, let's take a look at Netflix. Again, if it's this close to earnings, not going to be something, as I mentioned at the onset of our chat, this short a window into earnings, not a stock that I will focus on. After, perhaps, usually 6 weeks out, I'll begin the scan. 4 weeks out, I'm really going to get pretty active in terms of looking for opportunities. 2 weeks out, that's where I really want to put usually a hard cutoff for no fresh entries. 48 hours out or a few days out, I won't be in that. Marco, yeah, we have a lot of great traders here at Simpler. But again, remember, anytime we're looking at probabilities, that's exactly what they are. They're just probabilities, right? If we're looking to forecast where a market is going, it's going to be based on previous levels that we've been able to reach and then the previous reactions. And I'll say this kind of in the same way I was answering Martha's question. We want certainty. We want to believe that people out there can give us targets. We want to believe that people out there can tell us where a market's going to be in 3 or 4 weeks. We are adults, right? We know that if you asked somebody, let's use football. If you asked somebody, hey, week 3, are the Redskins going to win? They'd look at you like you're nuts, wouldn't they? Well, who are they going to play? We can set up probabilities, right? Who's injured? We can set up probabilities. What's the weather like? Home field advantage. But nobody knows. And yet, somehow, when it comes to market analysis, we just throw that common sense that we should have as adults out the window. And so I find myself very much in the minority of putting this message out there. And whoever listens, you'll benefit. Whoever doesn't, well, it's still going to be a frustrating road to hoe. I would love to say we can predict where markets are going. We cannot. Any more than I can tell you if the Dolphins are going to win in week 6, right? We can think about probabilities, but we don't know, right? I hope that makes sense. All right, next up is, let's see. Bear with me, gang. Would I advise to day trade the S&P with the same day or next day expiration? Michael, you've got the wonderful opportunity to be trading Monday, Wednesday, Friday expiry. My recommendation is anytime you're going to trade an option, make sure you have sufficient open interest. Make sure there's liquidity there. When it comes to the SPY, Monday, Wednesday, Friday, you will not have any problem. So remember, you're not choosing same day or next day. There's no such thing as same day or next day. On Monday, well, on Monday, it's got to be Monday. On Tuesday, it would be Wednesday. On Wednesday, it would be Wednesday. On Thursday, it would be Friday. And on Friday, it would be Friday's expiration, right? So just look at whatever is nearby. If it happens to be a zero-dated option, awesome. I'll day trade that. If we're trading on a Tuesday, obviously, I'll be trading Wednesdays. But it's not a zero-dated. It's just the next closest expiry. So that's the way that I do it. I don't get too fancy about it. All right. Okay, gang, that is a wrap. Thank you, as always, for the questions. Gang, I always give you all straight up what's been working for me for a long time, 30 plus years. And at the end of the day, I can tell you this. We counterpunch as traders, right? We're boxers, we counterpunch. Or if you want to think of yourself as a batter, which is my favorite analogy, this is Warren Buffett 101. We are a batter at the plate. I've got a pretty good idea what the pitcher might throw my way, but I really don't know. I don't know what the pitch is going to be. I don't know how well it's going to be thrown. And I don't know if it's going to be over the plate in an area that I know that I can connect with. But my job as a trader is to train, be ready, right? And recognize as quickly as I can whether or not that's a pitch that I can connect with. We are batters, gang. We're not dictating the pitch. We're not going to try to foretell the pitch. We just know that a pitch is coming our way. Hopefully it's not heading at our heads. That's what we're always looking for. And this is something Warren Buffett talks about even with investing. That's the way I look at my trading. And the more we can think about that, we realize that it's our job to recognize and react, not predict. And I think the more that you can get to recognize and react, the better your trade. And then control risk, right? It's the whole other part. And then control risk. Recognize, react, control risk. You're trading at this point, right? That's what trading's all about. Thank you as always. I'll see you tomorrow. Same time, same station. Be good to each other, gang.